Morning and welcome to Stockgradar's Premium Portfolio Service presentation. This is just an overview of what I presented in Melbourne last week. Now I just want to start off, explain a little bit of background, and then go through the results, which is obviously what you're all keen to see at the moment. For many years I've been running the Stockradar website, educating, training, publishing recommendations on over 160 stocks in the ASX 200. Today there is a wealth of confusing information, strategy overload. My message to anyone trying to make money in the shark-infested worlds is to be clear and focus on one objective with one methodology. By doing this, you take control of your investments rather than let the market and other people control you, and that's important. So now I take the Stockradar service one step further to help and guide you in running a successful stock market portfolio using Stockradar's simple objective of achieving absolute returns year on year. That's what we're all interested in, not going up and down with the market, but trying to make this equity pile grow every year. It's based on a methodology of systematic processes wrapped up in a safety net of risk management control. Key. I'll now take you through the service and give you some history to help you understand what and why I do it, and then focus on the results of 16 years of the performance. The portfolios are low cost, safe, simple to understand and easy to manage. This is what I'm here to show you today, and as well as I'm always here to answer any questions you might have. And my email is on the homepage of the website, and I think I'll show it later on in the presentation. My phone number is also on the website, there for you to see the landing page. Okay. My aim is to provide you with an independent, unbiased service and develop a real relationship with my members based on transparency, trust and integrity. And there's a big issue of distrust in the financial markets now and confusion, and I totally understand where you're coming from. So I'm just trying to provide some sort of easy way, an easy route for you to understand and to manage. Okay, so firstly, let's go straight into the portfolio. Firstly, it delivers solid compound annual growth rates, which is key. Traditional thinking said that the safety net of diversification is a sound strategy and helps trim the edges of mistakes. However, it seems it may also trim the edges of winners. Conviction is our best friend. This turns the table on what we normally think about diversification and conviction. So I'm going to go through it today and try and explain it to you. Okay, why the portfolios? Really, I want to shrink the 160 stocks that I cover into more manageable portfolios for you to manage, and also to maximise the benefit of the stock picks. Okay, the key is to research and test a systematic price-based methodology. Would it work? Can I make this thing achieve what we want to do over time? Now, then I had to also make sure I matched this with appropriate risk governance so that you were safe with your portfolios and not at risk of carrying drawdowns and having capital decimation. Okay, the portfolio construction. The differentiating factor is I focus on the tangibility of price and not the vagaries of trying to match fundamentals to price action. Our objective is to catch trends and momentum waves which are based on psychology, not fundamentals. Okay, how was it done? So I had to define some data universes to work with rather than the whole thousands of stocks on the stock market. So I had to corral. This is all part of controlling what I do the whole way through. Everything's controlled, and that's very important. So I initially started with a conservative portfolio of 20 stocks based on a 20 stock universe. So this was a binary portfolio. So if I had a couple of $100,000 with 20 stocks, I've allocated $10,000 to each stock, and that means each allocation is either in cash or in equities. So at the moment, my conservative portfolio currently holds 10 stocks, which means I have 10 allocations in equity and 10 of those allocations in cash, 100,000 in equity, 100,000 in cash. That's how the conservative portfolio works. Now, the Energizer was a way for me to try and leverage the stock picks, the benefit that I was getting from the stock picks. So I now expanded that universe to 100, but kept my portfolio size at 20, which means then I had 100 to select from and 20 to my portfolio, which means I've got a much better chance of having a much higher weighting in my portfolio rather than the cash component. So the number of 20 stocks can vary, and this is what I'm here to talk about today. the market, these portfolios are generally full unless the market's going down, and one must drop out of the portfolio before another one can come in. And in the case where there's two entries and only one spot to go in, I always take the lowest cap stock. Okay, so that's that was the define the universes. Now this is the home page chart of the conservative and energy portfolios, which you can all see on my landing page. It simply shows you the conservative portfolio, the red line below there, which is running at a CAGR of 9.67, which is pretty good. Okay, then the Energizer portfolio, although slightly more volatile because it's more aggressive, still has a fairly steady uptrend through the whole market, but it's carrying a compound annual growth rate of 12.11. So I regularly update these portfolios on the home page. What I'm going to show you today is the Energizer portfolio. This is a 20 stock Energizer portfolio. I'm going to vary those sizes and you can see how the performance has changed. Okay. So, to quantify success and have proof of process is essential. So in my modelling, I firstly had to build a historical database, which means I had to have data, dividends, cash management trust rates for cash, and also all my trades. Then what I also had to do was I had to go back to 2004 and look at the market capitalisation of the market then, to look at the top 100 stocks, and every 6 months forward, I have reviewed the market capitalisation of the stocks to go where I am now. So a long time ago, we had Pasminco, we had Rinker Group, we had Hills Motorway as stocks. They don't exist anymore. So we had to keep changing that market capitalisation as we went through. And that's a very important part of what I'm doing, which is I'm forward moving this process. I'm not back testing, I'm not curve fitting. Okay, so the proof of process is vital. And in the modelling, I then tested a range of universes, top 100, the top 50, the mid-cap 50, and I also have a smaller database of small caps, which only goes back to 2015, which is not really enough data to validate any results. So I'm going to focus on mainly the top three. As I said to you before, I'm forward testing only, which is reality. There's no back testing or optimisation, which is not reality. It is curve fitting, no matter which way you look at it. Okay, so the results proposition that I've got from all the testing, which I'm going to show you, is conviction rather than diversification. Okay? So here is the main chart of compound annual growth rates, and I'm going to explain this to you. Firstly, what I've got here the top 100 database and the mid-cap 50 database in the grey. The top 100 is in the orange. Now, along the bottom there, I've got the number of stocks in a portfolio. So for our current Energizer portfolio, which sits here, which is the top 100 and is 20 stocks, let me just highlight that. There's the top 100 and the 20 stocks. This comes in at 12.11, okay? So up here you can see all the orange line, which is all the number of stocks in the portfolio. So you can see what I'm going to show you today is some charts, and what the interesting thing about that is there's no randomness in the results. It's all very similar, which supports this proof of process. So I started at 5, 4, 3, 2, 1 was two smaller portfolios and results were too erratic. But from 5 on, they become very smooth and similar. So here's the 5 stock 100, which returned 21.67%, and the mid cap returned about 17%. And you can see as we go through here how the results start to decline as we have more stocks, as we get more diversified. So this chart is showing you the benefit of conviction, putting your bets on what you believe on. So I'm placing bigger bets on these stocks. So you can review this chart, and if anybody has any questions on any of this presentation today, please send them through to me. So this is a very important chart, and this shows you the results of the different size portfolios and the two best performing universes. The top 50 was not a very good performer, so I'm not even going to bother looking at it at the moment. Okay, so that's the compound annual growth rates for every portfolio from 10th of March 2003 to 10th of March 2019. So there's 16 full years of bull market, bear market, sideways market, choppy market from last year and back up again, all those sort of different markets. So that's what we want to see. And you can see the performance during that, because I'm going to show you the equity curves of all these portfolios in a minute. Okay. So the conviction focus, it comes from two beliefs. One is having confidence in your stock selection process, and placing higher bets on a single stock than a broader diversification portfolio allows. The other thing which I don't really have in there and I should have in there is my risk management, which I'll talk about a bit more as we go through. That's a vital part of achieving this success. So the risk is I place larger bets and I have larger stops. The profits from my larger bets more than compensate for my larger stops. Okay, so the stop size on percentage basis is the same, but because I've got a bigger bet on it, it's a bigger dollar value. Okay, what I'm doing here in my risk process, I'm cultivating and leveraging the premise that I've always based Stockradar on, which is there are big wins, small losses, and big losses when we trade. If we can cut out big losses and focus on small losses, small wins, and big wins, then we are going to make money because we're biasing it very much towards a profit ratio. And cutting out big losses is quite simple. You just get out at a certain percentage loss, whether you think you're right or wrong. Your egos go out the window, all that sort of stuff. You just do it and you cut out those big losses and you don't carry drawdowns, which is very mentally liberating. I find it anyway. Okay, so the Stockradar Premium Portfolio Service. Now, this is really, it's a kind of busy chart, but what I'm trying to show you here is the similarity of the patterns, which is very important. So although the difference in end values, the way we get there is fairly similar in ways. So here I've got the top 100 universe. I've got the equity curves for the top 5 to the top 30 stock holdings. Okay, so 5 stock, 6 stock, 7 stock. So up here we've got the 5 stock. Okay, and you can see the charts that I'll show you all have the same scale. So I've turned 20,000 into nearly 500,000 up here, 470,000. So this is over 16 years. So the 5 stock portfolio is right up here, then there's a 6, the 7, the 8, and this scales all the way down to the 30. Now the Energizer portfolio itself is right in here. It's a little yellow line that is there. This is the chart you're seeing on the home page. So all these portfolios are performing far better, and they're smaller portfolios, 19, 18, 17, 16, all the way down to 5. And you can then see right down the bottom here, the conservative portfolio, which actually sits underneath all those, which is still registering that 9.67% compound annual growth rates. So all these are much better. Okay, so that's the graph of the top 100 universe. And I've just broken this down to take out a whole lot of those portfolios. I've now just got the 5, the 10, the 15, and the 20, which is the Energizer, just so you can get a bit of perspective on how good the performance of this conviction process is. Okay, so now let's have a look at the mid-cap. Again, I've got the same scale here, so you can see although the mid-cap performances are reasonably good, they're not as good as the top 100. Interesting. Okay, so here we've got this, again, the same pattern occurs, 5, 6, 7, 8. The smaller the portfolio, the better the performance. And the Energizer in here is in here, a little yellow line around here somewhere, and conservative is down here, and maybe the mid-cap 30 is around about even on the conservative. But they're all still very, very good performing portfolios, no matter which way you look at it. And here I've just done the same thing. I've got the 5, the mid-cap 5, 10, 15, and 20 stock portfolios, so you can have a look at those. Okay, so that's the equity curves of those compound growth rates that we were seeing. So you can see actually how we got there. There's some big moves down. There are drawdowns. This is not a perfect system, but it's a good system because it works well. And there are drawdown periods. We've had a big period since January last year in the mid caps, not quite as accentuated by the top 100, which has recovered pretty well. But these periods will occur. Okay, but we are more than compensated by the up periods. Okay, that's the mid 50. Okay, now all I've just got here is all portfolios 5, 10, 15 and 20 for the 100, for the top 50 and also for the mid caps and also for the top 50. And you can see here the conservative portfolio is the dark blue line here, and underneath here is all the top 50 universe 5, 10, 15 and 20 portfolios. So they are actually performing worse than conservative, while the top 100 and the mid caps are performing much better. So you can have a little look at that chart. And again, the scale I've kept the same, and it's over the 16-year period. So worth having a good look at that. Okay, so just to go through the results analysis, the best performer is the top 100 5-stock portfolio at 21.67 compound annual growth rate. The best results come from the smaller portfolios in the top 100 and mid-cap groupings. The top 100 group averages from 5 to 30 at 15.46%. The mid-cap group 50 group averages 13.7%. So we're looking at some pretty good results here. This 20-stock Energizer Portfolio on the home page, I'm always trying to give you a comparison so you can see where we're at, gives an average compound annual growth rate of 12.11%. Okay, so there's some fairly good, we can do better than what we're doing at the moment, which is what we aimed and set out to do. Okay. The Stockradar Conservative Portfolio on the home page gives a compound annual growth rate of 9.67%. The smaller portfolios require a strong conviction from the investor, but the portfolio sizes from 5 to 20 all provide outperforming returns ex the top 50 data universe. So let's forget the top 50, they're not giving us our results, let's focus on where our results are, and this is not a 1 month or 1 year or 2 year test, this is a 16-year test. The smaller the number of stocks in the portfolio, the better the results. Just as an idea is at the 12th of April, what I was actually currently holding in some of those portfolios, you just get an idea. So the top 105 was holding Dexus, Evolution, which has now come out over the last couple of weeks, Fortescue, CSL and Telstra. Okay, then we go to the top 10 and you can see how we go through. There's similarities but not the same, and we're getting a fairly good cross section. So if I look at the top 5 and the top 50, I've got Evolution, Afterpay Touch and Oz Minerals at the moment. So because there's only 3 there, it means I've gone through a week where there's been an exit like EVN and there's been no stocks come in. They will come in pretty quickly and fill up again pretty quickly, and they may have already done so. This is the 12th of the 4th. We're now at the 30th of April right now. So you can have a look at those and you can see the different portfolios and what they currently hold, just to give you an idea. Okay, so to getting the portfolio started, what do? It's a very simple process. You simply sign up, you decide your capital allocation, how much money you've got to spend on here, then you decide what portfolio type you want, the 110, the 105, the mid-cap 17, whatever it might be. That's how there you go. That's all you really have to decide. The weekly process, from my point of view, is that on Monday you get an email with a simple model, the trading model signals. Okay, and you execute any trade with your online broker. Cheap. All this process is designed to be cheap for you. As I said to you before, it's low cost. Okay, so you execute your trades and you do that at a consistent time every Monday, not necessarily the open because that's a busy time, but maybe 11 o'clock on Monday morning. All the holdings and cash remain in your name and account. It's all in your business. This is all your business, so this is about you having control of everything. And then you input into what I have. I have a share trade tracker, which is a little live monitoring program, which I'm just going to whip you through quickly so you can get an idea of what it does. Just so you know and I know what's happening, we can both update it, we can both run it, we can both look at it, we get a snapshot of what's happening in the market. So that's your setup process, which is very simple. This is a share trade tracker, and you can have a look at this. The blue ones, the blue columns are the ones that we can update. But if you go through here, you see the date, you see the stock, you see the size of the portfolio. I'll explain the breach one when you become a subscriber. The sector it's in, the position status, the quantity, purchase price, buy cost, then you've got your brokerage, your total purchase cost, then you've got the last market price, the market value, then you can see your position, your profit and loss, your net profit and loss, and your gain or loss, whatever it might be. Okay, so that's a monitoring position for you. It's all of your open positions, and the closed positions go above there. So it's a fairly good little progress. This is updated in real time. Okay, so then I also have what we call a little dashboard. This just gives you a snapshot of your day's change, your profit and loss, your total market value, open positions, closed positions, total positions, and your current market portfolio value at the moment. So I had a client come in the other day who was very confused about what he had because of all the information he received from his current portfolio manager. what I try and do is simplify this process so you know where you started, where you are now, what it's cost you, what your returns are, all very simple and easy. Okay, so that's just a brief overview of everything. Just to go through the reasons you would subscribe to this premium portfolio service. Again, I'm trying to help people with managing their portfolios and make it easy for you at a good price. So you get the benefit of following a disciplined, consistent, methodical, profitable and a common sense approach. All my signals, all my stuff is on the website for you to see and understand. It's simple to manage, taking only 15 minutes of your time each week. All capital and stocks remain in your name and your account. There's a strict risk management policy to ensure capital preservation, one of my key objectives throughout the whole process, and I have 16 years of performance history to base all this on. So that's really about it. If you have any questions, my phone number is here. You can go to the contact us part of Stockradar to email me any questions, and I'm quite happy to answer anything on the phone. So this is where I'm heading with Stockradar. It's a very important move for me, and I think also for my clients and members, as far as running simple portfolios go at a low cost, trying to provide another option for you people than what's currently available with high cost fund managers, which are very confusing and strange. So that's all I have for today. Thanks very much for listening. I will hope to get out again and present some more about this service as I get more feedback. But as I say, if you have any queries, please get in touch with me, and good luck and happy trading.